Welcome back, folks. Dow's down 162. NASDAQ is off 33. S&Ps are down 15. Let's go over to our man, Mr. Teddy Kekstadt at forex-trading-unlock.com. And this would be a great day to not only kick
going
off,
on the forex market right now.
Seriously, not only kick off 2019, man, but these.
Happy New Year, right? This is one. You know, I started watching the markets when they opened this morning. It was a little quiet, and it was a totally different picture than what we're looking at right now with the dollar rally that's just slamming some of these currencies.
Isn't it wild, man? Last week, the pound went topside. I says, oh, this is it, man. The pound really wants to go. And then, bottom line, this morning, not only the pound gave it up, the euro gave it up, and they both gave it up in spades. I'm surprised.
The euro collapsed. The way it looked like when it opened up this morning, it looked like it was going to try and edge higher into the 115 handle.
Yeah. And you get the divergence. Gold's up 750, man. Gold's shaking it off. Silver's shaking it off. It's like, who's going to be right? It's like...
Right, well, especially since we talked last week, the rally in silver and gold. I mean, I was looking at those today and how they're still pressing the highs. You have the interest rate market that's still pressing the highs, and that's in the wake of the Fed meeting and everything. So now with this dollar, and the way it looked last night, I was looking at these other markets. I'm like, wow. Dollar might probably get a little hit to start the new year off.
Listen, man,
first opened up, it looked like that might happen, and the opposite is going on right now.
Yeah, it's you talk about volatility, man. Holy cow! And that that index at that 95,830, it closed below it for the whole year, and that's been the struggle in a huge way. So we'll see where this shakes out. I mean, was there? I guess did the pound and the euro give it up when those China numbers come out, or was that just something different?
That came out. They started to really fall apart a few hours ago.
Okay.
So I mean, like when I looked at it last night, they were relatively unchanged from the Monday's close.
Okay.
So.
And then the yen, the yen's basically, that looks like it does want strength, so that hasn't turned yet. I mean, it's given.
No, they got hammered again today.
Yeah.
I think it's because of the Nikkei. If you saw the Nikkei, how it traded today, it was lower.
Oh, yeah.
But it's slightly lower from Monday, and it's actually still off its lows from that it set the other day.
Yeah. No, that baby, that took some heat last night. There's no doubt, man. Well, actually went sideways, I guess. Okay. Yeah. Interesting.
Mm-hmm. Yeah. But I think we're at this inflection point where, I mean, we have so many markets on extremes right now. It's, I mean, when you look at the interest rate and even the metals like you spoke about with gold, if they keep pressing this rally, then I guess, these extremes are just we're going to keep on riding these extremes until we get, develop a little bottoming and topping in some of these markets.
Yeah, no, I can see that. The thing that's amazing is that the note and bond market just won't stop. I mean, it's like,
Right, especially with the 30-year piercing the new highs today, because the 2-year and to the 10-year, they were leading this rally.
Yes.
And today, the 30-year really busted out and was holding the highs, which really surprised me that the 30-year would hold up like that today.
No, I know. Well, listen, just when I was riding in, they were reporting on Bloomberg, it was the first time that, going forward in the 30-year, that it basically got inverted the first time in 10 years. So it's like, okay,
right.
It's like, really? It's going to be a wild one, but I can see.
I'm looking forward to 2019. I think we're going to have a lot of volatility the next few months at least.
No, you can see it. Yeah, you can definitely see it. And I guess it's going to be sorting out where people going to put their money, right? That's what it comes down to. Hey,
I'm loving it. I'm looking forward to it.
And Ted, and Tom, look at this. I brought this up Friday. I thought I was seeing things. The Fed Fund future rate, right? Oh, WIR.
Yes.
Wait, this is crazy, man. All these numbers. So, if you're watching Tiger TV, folks, these numbers going forward, right? We get an effective rate right now between 2.25 and 2.50. But it's like the market is saying that, hey, guess what? We're not going up at all in 2019. Now, that's changed so dramatically. It's unbelievable.
Yeah.
Right. And that's with the Fed policy that we know is trying to go the other direction.
Yes. Yes.
Exactly. The market is dictating to the Fed, we don't want this.
And how about
Oh,
we
yeah.
haven't even
That's
focused
even
on this
better.
column
Yeah,
in a while.
right.
And then, Teddy, what we have is the second column is the cut probability, which gets to 2% in September, 6% in October, but then December it's 13% for a cut, and in January of 2020 it's almost 29% for a cut. So there's nothing above make the 10% for a hike. And meanwhile, the number that's the biggest on that whole thing is a cut.
Great cut. I know.
To start or end, yeah. So brave
Pretty
new world.
interesting perspective, huh?
It is interesting
Yeah,
for sure.
and folks, what's so cool about this as we're speaking, either the currencies are going to be right, the metals are going to be right, or the bond market. Now, I'll bet on the bond market.
On the head right there. That's one of those. One of those are going to key. They're going to be the key to the cycle turn in all of these markets.
Yeah, no doubt.
Something has to snap.
Right. Snap.
Oh boy, what's going to snap?
And it's going to be fun.
Yes.
I'm telling you, man.
Yes.
Well, listen, we always appreciate the update, Teddy. You have a great one, safe one. We're going to make it a great 2019, man.
Absolutely, guys. Thank you. Happy New Year.
Happy
You guys
New
have a
Year,
great
man.
day.
Thanks, Teddy.